live. Welcome to the show, everyone. Welcome to Mills Briefs. In today's episode, or live stream, October 27th, 2025, we're going to cover a lot of information that we got going on today. We have a lot of news to get into. It's almost hard to know where to actually start here. So today, stocks soared, hitting all-time records. S&P hit over 1%. Dow was over a half percentage point due to the optimism of the U.S.-China trade deal that's going to occur. So those you don't know, President Trump is going to meet with Chinese leader Xi in South Korea on Thursday this week. And there was a lot of optimism from Treasury Secretary Scott Bessent and so on. Next, Qualcomm rose exponentially due to their new release or announcement of their new releasing chips they're going to put out in 2026 and 2027 that is set to compete directly with Nvidia. So that's a really big thing. That rose over 20% at one point today. So we're going to go into that as well. And next we're going to go into is the U.S. government shutdown, which is the second longest shutdown recorded in U.S. history as of today. So we're going to get into that and how there's been flight delays that have been impacted. SNAP benefits are set to expire on November 1st if there is not a bill that is passed to fund the government. So again, these are the three top news we're going to cover today. I was going to cover the CPI report that came out last week, but I'm not sure we're going to get into it because there's so much information to really unfold here. So please like, share, subscribe to the channel. Again, for just a reminder, I'm not going to be able to read any of your comments that you guys all send because I don't have the second monitor set up yet. So just please bear with me and I will let you guys know once I have that set up. So let's get into the headlines here. So again, just as I stated earlier, the stocks have been soaring ever since the futures on Sunday. Yesterday, the Dow hit 0.7% higher. The S&P jumped over 1%, like I said earlier, 1.2%, hitting 6,800 for the first time ever. And the tech-heavy NASDAQ led gains of almost 2%, setting a fresh record at the close. And this was all due to the Qualcomm stock that really led a lot of the tech stocks percentage-wise in their their gains today. So that was one of the one of the huge reasons why that occurred. So the first news on the agenda we're getting into is the U.S.-China trade agreement. Now, again, this is an article from The Guardian, so let's start right now. Let's just get into this and I'll add my commentary after we review this article. So the United States and China agreed to not a trade deal, but the framework of a trade deal ahead of the Xi-Trump meeting that is set to occur on Thursday. So the framework, this is interesting because the agreement or the trade deal terms are not released publicly yet. So this is all new information that just came out today. So I looked up other resources. This is all that I could find here. So U.S. Treasury Secretary anticipates tariff truce with China will be extended and that China will revive substantial purchases of U.S. soybeans. So they said earlier they're not going to purchase soybeans, so that's going to change according to this framework agreement that was released publicly. Excuse me there. So let's see. The United States and China have agreed to a framework, just like I said earlier. So this is aimed to remove the threat of the 100% tariffs on Chinese imports that President Trump was threatening. That would start on November 1st. So as we all know, Thursday is a couple of days before November 1st, which is on a Saturday. So this is a very good sign. And that's why the markets were really rallying Sunday in the stock futures market and today at the market open as well and throughout the whole day. So Trump arrived in Malaysia on Sunday for the summit. This is the Asia summit that President Trump is embarking on. And this is his first stop in a 5-day Asia tour that is expected to culminate in a face-to-face conversation with Chinese leader Xi in South Korea on Thursday. And this is one of the public moves that I see President Trump doing in trying to regain his standing globally. His poll numbers took a huge took a huge negative nosedive throughout the year due to his tariffs, due to CPI increasing, prices on groceries and everyday products increasing, according to the CPI report that was released last week. And just his standing in the world has taken a nosedive. And I think President Trump is trying to come up with agreements and deals like he did with Europe and Japan, and now he's trying to do with China before Q4 ends or before 2025 ends, so that he can have some legislative accomplishments under his belt. So on a political lens, that's why I believe that President Trump is trying to push for optimism with China. Okay, so China's top negotiator, Li Zhegang, said both sides have reached a preliminary consensus and will next go through their respective internal approval processes, which is a great sign. So this is all good. And then obviously the main reason why President Trump was looking for a conversation or an agreement with China is because China imposed controls on exports of rare earth minerals, which is very valuable for electronic windows and boot openings in cars and a lot of other products. So this is one of the biggest reasons why they wanted to do a deal right here. So let's get into some of the financial analysis of this China-United States framework trade deal. I'm not going to say trade agreement or trade deal because nothing's finalized. This is all verbal reports. So let's get into what Secretary Treasury Scott Bessent stated on Face the Nation. This is a clip from Face the Nation.
Soybeans were always going to be on the market. It's a global market. The three leading suppliers are Brazil, Argentina, and the U.S. And I believe that we have brought the market back into equilibrium. And I believe that the Chinese will be making substantial purchases again. Anticipating that we will get some kind of a deferral on the rare earth export controls that the Chinese had discussed.
Okay.
But again, this will all be, my counterpart, the vice premier, and I have set the framework, and it will be up to the two leaders to discuss the final terms.
All right, let's bring in our China correspondent, Min Lo, to break this all down for us here. So what did we reach a key consensus on? What's still missing right now?
Yeah, overall, it seems like a very productive weekend, at least from the Chinese side. The Commerce Ministry saying it was in-depth, it was constructive, and there were a list of things that they sort of had a framework consensus on, right, ranging from agricultural imports to fentanyl to shipping levies. The Chinese readout was a little bit vague. They talked about the key themes, but we don't really know what the Chinese is getting out of this deal. The U.S. side has been a little bit more outspoken. They've been saying that China is going to buy a significant amount of soybeans, that they're going to defer the implementation of those rare earth export controls by a year. But I can't see China really agreeing to all of these without some big concessions from the U.S. But
so this is a really good sign here because it's not just President Trump kind of speaking off Truth Social like he does many times and stating, oh, we have a great deal with China, or we have a great deal with Europe, we have a great deal with Japan, all this stuff without substantial evidence. And now here is substantial evidence from reporting from China's own party, from their own counterparty, stating that the deal was comprehensive, and that's a really good sign. And one thing that I really want to point to, which really a lot of the news hasn't really discussed, is this headline right here. Trump Xi to discuss a global peace plan. This is really interesting because I know on a global stage, militarily, there hasn't been there has been sort of this military sort of issue with the United States protecting Taiwan from China trying to claim it, even though China claims Taiwan, and having lots of warships that the United States military has in the sea near China. So it's kind of interesting that this is part of the discussion, because I'm really curious to see what that entails, at least that part.
But so far, the U.S. is saying that they're going to keep their export controls unchanged, even though they're going to sort of remove all those threats of extra additional 100% tariffs on Chinese goods. So what else is China getting out of this? That is not so clear at this point. And certainly China will want the tariffs to come down to be on par with other countries. That's also something to keep an eye out for.
Yeah, but the starting point on tariffs, though, was Donald Trump ratcheting up that rate. And then if that comes out to be the only win, that a bit of a mental exercise for me. Ukraine and Taiwan. Marco Rubio said Taiwan wasn't on the table. Was it on the table? Is it going to be on the table?
Well, we're hearing different things. So Marco Rubio said that it's not going to be on the table, but President Trump on Air Force One kind of left it a little bit open. He refused to answer the question directly from reporters, saying that he doesn't want to talk about it now. The trip is already very complex as it is, but he's sort of less definitive about this. So
it's interesting because that's actually was my first thought with the global peace plan, the idea of the Taiwan being a factor. And I highly doubt that the United States would involve any Taiwanese sort of leverage there and give that to China. It's hard for me to believe that would happen, but again, you never know.
Possibly it's still going to be on the table because President Trump did mention that he wants to talk about the Ukraine war and get to a peace deal on that with China. He wants to discuss the lowering of these purchases of Russian oil, which China has already done, right? Chinese state oil company has been cutting purchases of some of these sanctioned oil from Russia. But bear in mind, analysts are saying that actually China buys a lot of these oil from intermediaries. So while they might cut the direct purchases from the likes of Rosneft and Lukoil, they might get it from other sources, and they might not be willing to do a lot more given the strategic partnership between US and China unless they get a key concession, possibly on Taiwan. If the US decide to roll back their long-standing stance on Taiwan and agree to oppose Taiwanese independence, then maybe we're talking about something here.
Okay, this was really interesting. I really like this breakdown. This was from yesterday. So let's get into the breakdown here that came out today.
Tyler Kendall joins us now from Tokyo, where she's been traveling with President Trump. So, Tyler, what does it seem like was agreed upon in Malaysia over the weekend?
Yeah, hey, Danny. Well, it seems like both sides are trying to tee up some diplomatic wins for President Trump and Chinese President Xi Jinping to finalize when they meet face-to-face on Thursday. But the broad feeling is that this is really just a simmering of recent tensions and a bid to keep the conversation going down the line for a potentially broader trade deal. This week, we will likely see at least an extension of the trade truce that's currently in place and set to expire on November 10th, with the U.S. effectively removing the threat of an additional 100% tariff off of the table, seemingly in exchange for Beijing delaying and reviewing its recently unveiled export curbs related to critical and rare earth minerals. The Treasury Secretary Scott Bessent also says that China will resume its purchases of U.S. soybeans, though we have yet to get confirmation on how much and how quickly that will be done. I think it's worth pointing out that we heard from President Trump on Air Force One earlier today, telling reporters that recently launched Section 301 investigation into China's purchase obligations, including for agricultural products like soybeans from the first Phase 1 trade deal, that he's saying that could be taken off the table completely depending on how these talks go with Xi Jinping on Thursday. Now, there's a few other threads we're watching here, but everything that I just outlined really is a pullback of recent escalation from the last few weeks. But
this is interesting.
I have to say that I have my eye on that 20% tariff that is linked to fentanyl concerns, and it's been in place at this point for months as both sides say that they are making progress on the issue. Matt and Danny, if we only see an extension of the current trade truce in place, our analysts at Bloomberg Economics say that the effective U.S. tariff rate against Chinese goods will remain at 40%. That is 25 percentage points higher than the global average. So while this will perhaps usher in a period of more certainty amid what has been a lot of heightened uncertainty, there are still a lot of big questions and areas to overcome.
Yeah, I think she makes a lot of really good points because I didn't realize this. So there's so much hype with, let's see, let me make sure I pause this. There's so much hype around this, these talks that are happening and a lot of optimism, but just as Tyler Kendall stated here, if the United States and China only agree to extend this truce, which has been this 90-day pause that's been occurring multiple times throughout 2025, ever since the Liberation Day that President Trump enacted in April of 2025, I don't know if that's going to be a really great deal because, like she stated, this is 25 points higher than the world stage as far as those that enact tariffs on trade and everything like that. So that's a really good point that this reporter makes. So again, not a lot of information with the U.S.-China trade deal. I think there's a lot more that needs to be unpacked we're not going to know a lot, in my opinion, until Thursday, unless President Trump, shares some message on Truth Social like he likes to do throughout the week. So I'll definitely keep my eye on that. But one news that I really wanted to cover that I mentioned in the headline earlier for today's show is Qualcomm, which is an AI tech company, announcing AI chips to compete directly with AMD and Nvidia. This is huge because this is something that we see Nvidia take a huge conglomerate in, pretty much. Nvidia has been the sole AI chip distributor and manufacturer in the world, really. And Qualcomm announcing this and claiming that their chips are powered more efficiently, potentially, using less energy and using faster speed than Nvidia is a huge deal. Now, again, there's not a lot of information out about it. These chips aren't going to be announced or not going to be released until 2026 and 2027. So we're not going to know a lot, but let's scroll down here and see if there's any more information here. So Qualcomm stock soared 11% following the news. Again, like I was watching the news earlier today, and it soared more at a higher percentage rate, I believe, year to date today than year to date. So that just tells you how shocking and a huge boost this news is, especially with how green the market was today. It definitely helped with that motivation, or that momentum, excuse me, as well. So let's see here. The AI chips are a shift from Qualcomm, which has focused particularly on semiconductors for wireless connectivity and mobile devices, not massive data centers, but they're focusing on massive data centers. And again, in the whole world, the United States has the most data centers for AI because this administration has focused its resources a ton on AI. We've seen the Trump administration use its resources to give exemptions, with Nvidia selling chips in China, as well as investing in Intel. And now we're seeing Qualcomm be a part of this in the market and pushing forth its products of the AI 200 chip, which will go on sale next year, and then the following year the AI 250. So they're claiming that this will be able to power and people that use ChatGPT on their phones, for example, being able to have faster results and things like that. So this is a very big deal, especially because according to McKinsey, an estimated $6.7 trillion in capital expenditures will be spent on data centers through 2030. $6.7 trillion. And that number is higher than many global economies around the world. So this is something to really pay attention to. So here I found Bernstein's Stacy Ragan, his breakdown of why he likes Qualcomm stock. Because I don't know too much about it, so I really had to look into this. So let's see what this is about.
Outperform on Qualcomm, target at 185. Stacy, what a great time to have you on. I mean, what do you make of this reaction and the overall move?
Yeah, no, you bet. So today's probably a good day to announce something like this. Now, people actually forget Qualcomm has actually sold AI accelerators for quite a while. They've had the AI 100. These look like next generation parts. So we'll see if they can compete or not. Like, I don't know, but we've liked Qualcomm for a number of these reasons. I think there's a lot of option value. They're doing this in AI. They're also doing servers for AI. CPUs for AI servers. And I've always looked at it this way. Like, I don't know how big it will be for them, but what is it in my model? What is it in the street number? 0. Like, what has it been in the multiple? 0. Like, there's tons of option value here. So I mean, yeah, why not? And again, people forget that maybe they weren't even aware. They've actually sold AI accelerators for years. If this is the second gen or third gen part that they're now announcing, it takes time, right? But I'll take it. I'll certainly take it. The stock's been very challenging, and I think undeservedly so.
You know, Stacey, it's funny. When Christina was doing the news, stock was up about 2%. I took a look, up about 12% for the year. Yeah. So just to put that in perspective, in the last few minutes, it's gained well over 150% of its gain for the year. What about inference and the competition there? I know it's way early, but just give our viewers a sense as to how you see it, who the dominant providers are, and how that could change over time, and whether Qualcomm has a market share to gain here.
Yeah, well, look, I mean, so inference should be more fragmented than training. Training really is Nvidia. That's kind of where it is. Most of the other players that have really been trying to push and have been trying to push into inference because you can make the argument that some of the workloads may be more specialized, they may be more, power and everything else may be more important, and so there may be more room. Inference probably long term is also the bigger TAM, at least it better be, right? Because if you're looking for usage and adoption, that's where it's going to be. And so I think there's a point of view that there's more room for more players to exist in inference versus training that really has been owned by Nvidia. And again, if the markets are as big as people think they are, it doesn't take a lot. Again, a small. But this has been the bull case for a number of these guys. Like a very small slice of a very big pie could be big enough. Why shouldn't Qualcomm be a beneficiary of a thesis like that as well?
I mean, yeah, we also have some of these private chip companies as well. We've had a few of them on. I mean, some of it could be somewhat unproven, but what does it all mean for Nvidia as we move? I mean, I know models will still be trained, but ultimately, to the extent that inference is going to be more competitive, is it a threat to Nvidia's lock on the market?
Yeah. So look, I think Nvidia does and will do just fine in inference as well, and it's the same thing. Like people make these same kind of arguments between, like, for example, like GPUs and ASICs and which one's winning or losing, and I still think we're too early for that. I think the right question today is not which one's winning or losing, or is the opportunity still big or is it not? I mean, if it's still big, the pie's getting bigger. There's enough room for lots of folks to benefit. If the opportunity is not big, everybody's screwed.
I think he makes a really good point here. I like how he frames it to the point where he's saying this is not something about taking down the king of AI, Nvidia, taking them down and replacing them with Qualcomm. That's not what this is about. This is about getting the piece of the pie, increasing the pie for all these companies to really revolutionize the use of artificial intelligence in data centers, in computer technology. And I think that's something that's really interesting. So not a lot of information on this stock again, or this product. This is really new. There's not a lot of information out there. Like he said, this is early, so there's not a lot of information on it. But this was something from ChatGPT I was just looking up really briefly, trying to just see if there's any advantages with Qualcomm, because I couldn't really find anything too much. But the two things that I found, which I stated earlier, was cost and power efficiency. So it's supposed to be lower cost and more efficient in using less power to provide faster speeds with the chip. That's the main thing right now. So that's all that I found right here. But yeah, I think there's a lot to foresee. There's a lot of details. There's a lot to forego. There's a lot of information. There's a lot of information to dissect when it comes to AI. I think, things like Qualcomm, Nvidia, Palantir is a huge stock that hit a record high for this year again. That's another AI stock. So there's so much companies that I'm not even listing that are likely in the works of developing chips that we don't even know about. So I think this pie is only going to get bigger, just as that gentleman stated from Bernstein. So with that note, let's get into the third topic for today, which is the government shutdown hitting its, again, the second longest shutdown in United States history. So that's huge. And it's causing a lot of problems. And I think this is really interesting because it's causing airport delays. It's causing lots of government workers to many workers that are forced to work without pay. And this is causing airport delays and many more problems. So we're going to get into these problems that it's causing, because I think people that are working their regular jobs outside of the government, a lot of people don't understand the problems that many Americans, hundreds of thousands of Americans are dealing with in being furloughed. And for those of you who don't know what that means, furloughed is when you are sort of forced to go on unpaid leave because of the government shutdown, and you'll receive back pay later, but obviously people have bills, and this has been going on for almost a month now, and many Americans are struggling with this. I saw in the news from a Breaking Points video today that many American workers, government workers, were in line in food banks because they can't afford making rent or mortgage, groceries, utilities, all this information, all this payments that they have to pay. So it's really concerning. But I digress here. So here we go. Let's get into this, because this is really fascinating. This is going to affect and this affects travel. Again, we saw the Trump administration with Elon Musk and them defunding the transportation department and how that affected the airports in a negative way. And this is another reason how the shutdown is affecting the transportation in a negative way. So the Transportation Secretary, Sean Duffy, predicted on Sunday on Fox News that in the coming days, we are, quote, going to see more staffing shortages. So not less, more staffing shortages in towers, which means you're going to see more delays and more cancellations. So he's referring to, obviously, airports there. And the biggest airport, one of the most, or at least the airport with one of the most traffic in the United States is Los Angeles International Airport. And here's an example right here. There's a shutdown in Los Angeles International Airport that lasted for hours in just the latest of the shutdown-induced delay after stoppages that occurred from New York to Texas. So a lot of information that's happening here. And again, here's the graph. This is nothing new here. 2019, during Trump's first term, there was a shutdown that lasted longer. Hopefully it doesn't last that long, but you never know, honestly, because the Democrats and Republicans are at a standstill right here. For those of you who don't know, the reasoning why is because the Democratic Party is seeking an extension in government subsidies, I believe, for health care, for the Affordable Care Act. So they're seeking an extension in those subsidies. Yes, right here, extension in those subsidies to lower healthcare costs for Americans. And the Republicans don't want that. Obviously, they've been against the Affordable Care Act for a long time. So they're against that. But here's the thing. So we all know this. Everyone's known this for the last month. But this is the big thing that I think is going to put pressure on really President Trump and his administration. Is on November 1st is when lots of states, 25 states, announced on November 1st that SNAP programs are going to be shut off due to lack of funds. And that affects many, many Americans, especially many Americans in red states. So they're going to be under a lot more pressure to seek a deal before the end of the week. And they've been in recess for, I think, the last several weeks. And so there's no deal in sight. Some people say there's hope, optimism there may be a deal before November 1st. I don't really see it. We'll see. I hope I'm wrong. But that's sort of the background and what's going on right now. So SNAP is one of the biggest things that will be affected if the government is continually shut down. But also flights, as we've seen right in here. So the U.S. Department of Transportation said nearly half of the 8,600 flight delays on U.S. airports on Sunday were due to a spike in air traffic control absences. So this is a big deal because for those who don't know, air traffic control is a very stressful job. And for those people that, it's with a job with any job with high stress and you're not getting paid, that's going to add more stress to you. That's going to add a lot more stress, and people are going to call out sick. They're not going to want to work every day because they're going to overextend themselves and work harder and harder when there's a short staff, pretty much. So again, this is not a surprise at all. There's going to be less people coming in, and we've seen this. Nearly 3,000 flights were delayed on Monday with the shutdown in its 27th day. So over 3,000, or just about 3,000 flights. Man, this is crazy. Southwest Airlines had 45% or 2,000 of its flights delayed on Sunday, with American Airlines having nearly 1,200 or a third of its flights delayed. So you guys all understand right here, this is very clearly affecting the transportation in the United States on a national scale. This isn't just a Northeast Newark issue that was happening earlier in the year. This is affecting the nation. This is affecting the whole U.S. I mean, it's very clear. And let's see if there's any more information on here I want to see before I get it here. So USDA won't use contingency funds to bolster SNAP benefits during shutdown. So yes, this was a last-ditch effort by the government to use its contingency fund or emergency fund to help pay for the SNAP benefits, which is supplemental nutrition assistance programs. So food stamps, all of that fall under this branch right here. And they're not going to do that. You're not going to do that. And that's going to potentially impact over 41 million Americans. So this is a really big deal. And I think the Trump administration is, and I'll just say one last thing about this. I think the Trump administration is going to be under a lot of pressure in the Republican Party to make a deal to fund the government, because the midterms are around this time. Let's see, this time next year. And, you know, a lot of Americans are going to be thinking about this shutdown. I think that a lot of Americans are going to be thinking about who's responsible, and that 41 million Americans that use SNAP, that's a big percentage of a lot of districts and counties. So that's definitely something to pay attention to. So let's go into one more article here about the U.S. government shutdown. Let's see. I like this article because it covered a little bit more details about the or around the motivations behind the shutdown. So more statistics that I think is really important for Americans to know. So 1.4 million federal employees are on unpaid leave or working without pay. So not just hundreds of thousands of Americans, but 1.4 million Americans are in this position right here, which is very stressful. And I know I saw an article that, now we know the donor, but a wealthy donor donated, I think, around $130 million to pay American troops. But again, that doesn't involve the hundreds of thousands of other workers, as we see right here. And the Trump administration was moving to lay off about 4,000 workers, using the shutdown to lay off these workers. But this was blocked by a federal judge. We're going to see if that continues or not. So we can see the Trump administration is using this government shutdown to cut down on government bureaucracy, which is definitely something he's campaigned on, especially with Elon Musk when Doge was created back in early 2025. Excuse me. So yeah, this is really interesting, very interesting, these developments around this. So we covered SNAP. And again, one thing that which is kind of wild is that the House representatives the senators, they are still paid during the shutdown, which is kind of surprising because of course every other government worker isn't paid, but they are. So very interesting how that works. So let's see. So we covered that. Let's see if there's any analysis on the government shutdown, because I think I like to find a financial expert to kind of analyze what's next with it, but I'm not sure there's too much, you know. Let's see. Government shutdown. From what I've seen, there hasn't been any updates on it. I'm trying to find a Yahoo like finance, like a finance perspective on it. So it looks like these are all older videos here. So it doesn't look like there's anything new on here from what I see. I'll check Bloomberg. If that's not there, then I'll move on to another topic. Okay, so yeah, it doesn't look like anything too new here. So let's move on to another topic here and see if there's any other breaking news before we end the stream here. So yeah, there's been a lot of news today. It's hard to keep up. I'll probably cover like a quarter of the news. So Tesla chair pleads with investors back Musk's $1 trillion pay plan. So or he may leave. So apparently Musk may actually leave. We'll see if that actually happens. Amazon is planning to slash as many as 30,000 corporate jobs this week. Actually, you know what? Before I cover this, I really want to cover the CPI report, because that's something that is really there's so many findings in it, and the Fed meeting the Fed chair, the federal board that's meeting this week, they have the FOMC meeting tomorrow and Wednesday to decide whether they will cut interest rates. They only had the CPI report to rely on, which is kind of wild because due to the government shutdown, they're missing a lot of key studies that they use to analyze and make decisions, such as the jobs report, the JOLTS report, maybe the PPI report. There's so much more information they typically use, but they're kind of working at a lower rate right here, like a disadvantage, only using this inflation report. But nonetheless, they plan to cut rates anyway. I think there's like a very high percentage chance that they're going to cut interest rates. So that's not a surprise at all. But let's see what happened with this report, because the market really celebrated it when it came out last week, because the report came in less inflation than expected. Excuse me, I think I need some water. So there is less inflation than expected for this CPI report, and let's see why that is. So, and here's the thing: I don't believe it's great news, because if anything, inflation still rose, so it still is going up, and we're seeing this because everyday products have increased. So it went up to 3%, so not a huge increase, so that's still good. But let's get into what's gone up. So there's been a 4.1% jump in gasoline prices. That's a huge jump. Food saw a 0.2% increase. Commodities, 0.5% increase. Energy was up 2.8%. And I think a lot of Americans definitely felt that with electricity prices really skyrocketing this year. And then food rose 3.1%. I don't know why it says food prices. Oh, so food prices saw a 0.2% increase. Food rose 3.1%. Let me see if I can find another article here, because this one's not too great. But I know, let me see if I can find another one. But overall, from what we see, the CPI report didn't show high inflation, so therefore the Federal Reserve is very likely to cut interest rates because of the very slowly heightened inflation rate that the consumer price index revealed. I guess I'll have to just go to the actual report from the government. Might as well just do that. So I don't really like the format of this, but I'll just kind of breeze through it here a little bit. Actually, no. Let me go the CPI report for Yahoo Finance. They usually have a very good breakdown. This is considered old news, considering, over this. So we don't need to watch the video. So inflation held stubbornly around 3%. In September, just as I said, stated in that graph. But let's see what's rose. So prices rose month over month. So below August's 0.4 rise. So here's the thing. So because it rose slightly less than August, that's why they're saying it's good news. But nonetheless, it still rose. So inflation still went up, but it went slightly lower than expectations, only 0.1 lower than expectations. So not that much less in my view. I don't think it's something that, is great, but I think the market was expecting a much higher inflation rate. So I think that's why they really rallied last week. So yeah, gasoline went up 4.1%, like stated in the CNBC article. Core inflation, this is what's really good to follow. So core inflation, which strips out volatile food and energy costs, so more of the meats, kind of the meat of everything here, rose 3% year over year in September, down 3.1% in August, and below economists' expectations. On a monthly basis, core prices increased 0.2%, easing from August's 0.3% gain, which was the strongest monthly rise in 6 months. So despite August's 0.3% rise in core price inflation being the highest in 6 months, a lot of economists are celebrating the 0.2% slight increase as a good thing because it's less than their expectation. Yes, I agree that's a great thing, but again, inflation still rose, and we're seeing this because of the Trump administration's insistence on its tariff policy, from what I see. So this was from last Friday, this report. This was delayed. This was supposed to come out much earlier, which is why we haven't seen the report for October yet. So, yeah, I think that's pretty much everything. Yeah, I think that's pretty much everything here. So yeah, actually no, there's more. I don't want to miss this here. So housing inflation also cooled, so that's good. So report confirms inflation is slow but steady, decent. So the inflation is decent, but here's the thing: inflation is still going to continue because of the Federal Reserve's insistence on cutting interest rates due to the poor jobs market. And of course, many investors say this is the right thing to do because it's overdue. Has inflation, or excuse me, the interest rates haven't been moved at all for most of 2025. So I think in that sense, it makes sense. But the thing is, many people think that the housing market is going to, the mortgage interest rate is going to decrease if you cut interest rates. And in some ways that can be true. But the thing is, the Federal Reserve does not directly impact mortgage interest rates. This is one of the biggest myths that many Americans don't understand. And I'm not trying to be boastful. I didn't understand at first either. Like, it takes a lot. Like, I had to kind of read through it a little bit. But mortgage interest rates are typically 30-year fixed rates. And what the Federal Reserve controls is the rate on short-term T-bills. So like short-term 5-year, maybe 10-year sorts of T-bills. Actually, you know what? Let me look this up because I don't want to butcher this because this is really important information. So, I believe it's like short-term for the most part. So shorter term T-bills. Okay, so short-term T-bills. But what's the number though? I just said the number that it affects. All right, never mind. I guess I'll have to find that later. Come on. Which government here we go. I'm trying to be more specific in the question so I can figure this out here. So short-term bonds like treasury bills, while long-term bonds typically see their prices rise and yields fall as well. So it does sometimes, it correlates with the short-term bonds, but mainly the Fed impacts short-term bonds or treasury bills. So not the 10-year. So I was wrong about that. More so the 2-year, and I think the 5-year falls in that category. So we'll see what happens with that. We've seen mortgage rates fall to its lowest rate in almost a year recently. So I think there's definitely encouragement. There's encouraging signs that will help stimulate the housing market and help more Americans look into purchasing homes and all that. But at the same time, housing prices have gone up and have not gone down. We've seen some markets where the prices have gone down considerably, but on a national average, it hasn't. So I'm really curious to follow that also. And I think I will I'll show you guys one more video from a really, really great creator that I follow that kind of goes over this. He came up with a video today on the Fed and what this means for home prices. So we'll just show some of this.
I want to give you a housing market update. We're going to cover home prices, mortgage interest rates, and what you can expect in the near future. So about that, what you can expect in the near future, that's just going to be my opinion, what I see coming, but it's going to be based off the facts I'm going to show you. Let's begin with home prices. Here are the metro areas where home prices have fallen over the past 12 months. If the bubble is darker red, that means that home prices have fallen more in that metro area. You could take a look at the scale in the top left.
Oh, there we go. Obviously, you can see Florida definitely took a major hit with these
if you noticed,
sales right here on the bottom left, on the bottom right.
They're coming from the south. I mean, take a look, especially from Florida and also the West Coast. Now, I want to show you the metro areas where home prices have been going up over the past 12 months. And as you're taking a look at this, it's going to be the same concept. If the bubble is a darker blue, that means that home prices have risen more in that metro area. You can take a look at the scale in the top left. And as you can see, there are a lot of markets where home prices have gone up over the past 12 months. However, the heaviest concentrations are in the Midwest and Northeast. Okay, so of the largest 300 metro areas in the US, home prices have gone up in 195 of those markets, and home prices have gone down in 105. Okay, so I showed you each metro area on the map, but now I want you to take a look at the national average. So take a look. Home prices are up by 1.7% over the past 12 months. But listen, if home prices are down, like if you're going to tell me in the comments, like home prices.
So that's the thing. So home prices are still up. Now, number of homes sold, that's up. So that's a good sign. But at the same time, home prices have risen. And the national average for 30-year fixed mortgage rate, 6.4%, again, rose 0.2% year over year. That's going to prevent a lot of buyers from looking into purchasing homes because of that high interest rate, especially given that interest rates were at one point around 2.5-3% 5 years ago. And again, that's likely never going to happen, or if it does, it's going to be a very rare event if it does happen, because that was due to the pandemic and the Fed really pushing quantitative easing to stimulate the economy due to the pandemic. So that's a very rare circumstance that's going to happen. But because of that, many Americans got homes and had that interest rate. They're not going to want to move because the interest rate, the national average interest rate right now is over double that interest rate. So this it's kind of a conundrum, because that's why I think a lot of people are a little bit hesitant with even moving.
Prices,
if they have a good interest rate.
They're down 10% in your area, I believe you. But you have to understand that somewhere else, they're up by 11.7%. And this is what it averages out to on a national scale. Okay, so I'm going to give you a prediction for next year, 2026, and it's going to be based on the facts. But first, I want to show you what's going on with mortgage interest rates, because of course, that's going to play a big role in the housing markets. Mortgage interest rates have been falling, but why is that? And how much lower are they going to fall? This is the average interest rate on a 30-year fixed. We are near 6%. Okay, so sure, it's nowhere near the 3% and the sub 3% that some people are fortunate enough to get about 3 to 4 years ago. But of course, it's much better compared to when we were flirting with 8%. That was back in late 2023. But now it's on a downward trend. It's been on a downward trend in 2025. But why is this happening, and what can we expect? Mortgage interest rates have been falling because the Federal Reserve has been cutting interest rates, their Fed funds rates, and because inflation is not raging hot. Now, when I say that, I mean relatively speaking, compared to 2-3 years ago. Okay, but
the danger is it's hard to imagine that it would ever get to that point, that level, where it was like 8% inflation. But the Fed is heading on a very similar trajectory. Now, I don't think they're going to cut, multiple basis points, like 100 basis points, or excuse me, like 500, very high basis points. I don't see that really happening. They're probably going to do 0.25% basis points cuts every single FOMC meeting for the next several months. That's my prediction, because they've held rates for so long, and the jobs market has been pretty poor. But we do risk inflation potentially getting to 3.2%, 3.6%, or eventually higher than that, because of the instability of not only the tariff policy, but also cutting interest rates. So this is going to even increase inflation more, especially because we've already seen a sample size of inflation going up due to the tariffs.
I can't just leave it like that, because there's a lot to unpack here. First of all, the Federal Reserve does not control mortgage interest rates. So here's how it goes. When the Federal Reserve cuts interest rates, it affects interest rates on short-term government debt the most. Now, I just want to emphasize this part. So I've said this before, but I just want to remind everyone. Mortgage interest rates are correlated to the interest rates on the 10-year government debt. So when the Federal Reserve when they cut their Fed funds interest rates, yeah, it's going to help to lower mortgage interest rates somewhat. So that's why we're seeing a moderate decline in rates. We're not seeing like a plummet. But you have to remember that we're just talking about interest rate cuts, so Fed rate cuts. The Federal Reserve has other tools to lower mortgage interest rates. Now, I want to give you my expectation. The Federal Reserve will be ending their monetary tightening cycle very soon. Word on the street is that it may be even this month. Now, it's my expectation that the Federal Reserve will continue cutting interest rates and they're going to start their quantitative easing cycle in 2026. And when they do their easing, I mean, who knows how much in assets they're going to buy in print, treasuries, MBS. A good question is...
Yes, this is his prediction. So I'll kind of let that go for now. Again, so there's a lot of news coming out, starting with, let's see, let me block that. There's an earnings report that's going to come out. What was it? Tomorrow, SoFi, and they're really huge growth stocks that's going to come out tomorrow, as well as one more. I think Palantir is going to be this week as well, or next week. Let me Google the earnings reports because let me see. There's several. There's a lot of there's a few Mag 5 companies that will be out pretty soon. So obviously there's a ton of earnings, but the big companies that a lot of people are going to pay attention to is the SoFi. Oh, Google, obviously. Google's on Wednesday, and then Palantir is next Monday. Yeah, next Monday. So Google and SoFi are going to be the really big ones. SoFi is a stock that's been growing a ton. Really year to date, it's at $30 now, but if you look at the chart year to date, it's risen almost 100%. This is one of the largest growth stocks in the market, so I expect this to really go up a lot. I'm not sure what percentage, but definitely a lot in my opinion. And what else? I think Google, I'm not too sure about. I haven't been following Google too much, but yeah, so we'll see what happens. Again, thank you all so much for listening. Today was the first. I say I had other official live streams before, but yeah, this is gonna be fun to do these more often with you all. So thank you all for watching. Comment your thoughts below. I know it's a live stream, so I'll probably see the comments after this once I get the monitor connected, so I can kind of multitask and see what you guys think while I'm streaming. But yeah, this is gonna be fun. It's gonna be a fun week.